courtesy of everybody on the call, please ensure that your mic is muted if you're not actively asking a question or making a comment. All right. We will, in 1 second, take a look real quick at trading economics, see what has transpired through the day, and then I will hand things over to Benny, and he will take us through the evening. All right. So let me get this shared. All right. So drop me a 1 in the chat. A, if you can hear me okay, and B, if you can see my trading economics screen. Oh, chat's not enabled. Give me 1 second. There we go. There we go. You guys should be able to chat now. Sweet. All right. Appreciate you. Top article. Australia Q3 GDP growth below the estimates, right? So we talked about this morning having fundamentals kind of going both ways, right? The Reserve Bank of Australia increased interest rates yesterday, and they said things would be data dependent. Some investors took their statements more hawkish than dovish, but so we have some back and forth going on, right? So similar to the recent trend of data coming out from around the world. U.S. futures steady after a downbeat session, steadied after Asian trade, after another losing day on Wall Street. The top U.S. bankers issued recession warnings amid persistently high inflation and rising interest rates. Futures contracts tied to 3 major indexes drifted flat to slightly positive in extended trading. MongoDB surged 26% on better than expected third quarter revenue and a strong growth of the fourth quarter guidance. In regular trading Tuesday, the Dow fell 1.03% and the S&P dropped 1.44%. So we had some back and forth, right? Then we had the moves came on the heel of dire warnings from banking executives. The JP Morgan Chase CEO, Jamie Dimon, saying that persistently high inflation will dent consumer spending and most likely drag the world's largest economy into a recession next year. Investors also fretted about the prospects of further monetary tightening following the release of the better than expected U.S. services services and jobs data. All right. So again, back and forth, but we got some what's the term I'm looking for? Recession fear. Sorry, we got some recession fears coming out of some of the largest financial institutions. So that is something that could definitely drive the market, right, and drive the sentiment. So we'll keep our eyes peeled on that. We had Japanese shares fall as tech stocks drag. It's another thing that comes with those recession fears. You have your tech stocks and your tech companies pulling back, starting to lay off employees. We're going to see that happen as we continue to move through the end of the year and the beginning of next. Okay. Oil route intensifies, right? Crude futures dropped more than 4% to below $74 per barrel, lowest since December 2001. Right, so we got downward pressure and concerns, right, all around the market. Okay, all around the market. So let's take a look over here at the calendar. We will refresh this. Right, so we had services PMI data come out. Nope, that's not it. Today here, Aussie GDP growth below, okay, and that PMI data was yesterday, right? The services PMI data. So we'll take a look at those Aussies today, this evening, to see what happened. We knew they were at some key levels, some of them. So we'll see if they made some adjustments there. Coming in tomorrow, we got Bank of Canada interest rate coming out at 10 o'clock in the morning. So we will check things out there and see how they go. All right. So that was just a quick look from a fundamental perspective. Do we have any questions there?
No.
Nope. All right. Benny, we got you in, bro?
Ryan, what's going on? What's going on, everybody?
My man, you doing all right?
I need a new laptop, Ryan. I need a new laptop. I think I've been putting it off for the longest time, but I guess it made the decision for me. So
for you.
Yeah, my HP is now with the ancestors, man. Yeah, it's it's done. So I had to switch over to this other laptop, which is super small. I'm sitting there squinting at the screen. But we're gonna get this done. I'm happy and grateful to be here. Thanks, everybody. Sorry about that. Sorry for the delay. Thanks for hanging in there. Drop Ryan some sevens in the chat. Thank you very much, Ryan. I appreciate you saving the day, saving the session.
No doubt, bro. I'm gonna stop sharing and send this to you, man.
Sure, man. Appreciate it. Thank you. So let me figure out which screen I got up first. Okay. Come back. That's not what I want to share. There we go. That's the screen. Can everybody, Ryan, can you see my
we got you locked in, bro. US dollar.
All right, appreciate it. So we are all good now. So great job covering the fundamentals. So just taking a quick look at the dollar index, we can see that we're finding a little bit of support right around that 61.8. So still just shy of that weekly support level here in blue. But we'll see. It's retesting this level that it just broke past support, becoming future resistance. We'll see if we get a break and a close above this daily level. That's gonna be quite interesting to see what happens, right, as we move forward through the month of December. We know we probably got 50 basis points coming from the Fed. I think, Ryan, what are they expecting? 50 basis points out of Canada tomorrow?
Yes.
Yeah, so oh man, it's been one heck of a year in regards to interest rates. They've been pretty fast and aggressive all year long. Great lessons to learn. So let me ask everybody this as we are into December, and Ryan and we are preparing for the upcoming year. We're always looking at how we can do things better and differently, and planning a lot of good things for the group in 2023. So let me ask you this: how many of you are consistently marking up your charts every weekend? Drop me a one in the chat. Awesome. Okay. And how many of you, drop me a two, how many of you are journaling your trades, like taking your screenshots, recording your wins and losses, pips gained, pips lost? Shauna, what's going on? Always good to see you. We got two. Joy, two. Jeremy. Okay. All right. Good. Okay. So we're doing that. Okay. Now, how many of you, half and half, in between? Appreciate you being honest. I know there's times where I get inconsistent myself. How many of you, I was about to ask, just lost my train of thought. Too many hits, man, playing football sometimes. I think that's what it is. Or I'm just getting old. But what was I gonna ask? How many of you have taken, right, have done the test and have taken 100 trades, right? Because this is what my mentors did to me. 100 trades, at least 100 trades, same setup, right? Same exact setup for at least 100 trades and track your results. Drop me a 3 if you've done it. No, no. Okay, okay. All right. Michael. Timo's killing me. Okay. All right. Just wanted to know that as we're looking at planning some things for the new year. We've covered several aspects of training, from fundamentals to technicals to different entry points to support and resistance, breaking retest, fibs, 80-20 is the whole nine. Both 80-20 and the 61-8 for Jeremy. Awesome. Need to get my life together. That's funny. But so we really want to start to home in on something, because this market, we always say, is a very primitive market, right? We as humans tend to complicate things. So through all the education and things that we talk about and that we provide, right, is we try to add that value, because we know we have different people from all walks of life, different levels of experience. It's important, right, as you're going through your journey and you're getting those repetitions, that you really start to home in, right, on your comfort level with particular setups. You really look, there's folks out here, there's traders who are good at one thing in the markets, one setup, in the market. The rest is all risk management and patience, right? And risk to reward, right? Patience, risk management, okay, your risk to reward. That's it, right? So you if you have those things together, right, and you find your comfort zone in regards to the setup that you like to trade, and you stay patient, you can make a lot of money in here trading, right, that one particular setup across the board, right? So we know some people have where they trade one pair, right, and that's all they trade. But what we're telling you is, you can really lock in and home in on one, technical setup, right, that you like, and get consistent and get good at that one thing, or maybe it's two things, right? Like Jeremy, the 80-20 and the 61-8, right? So think about that as you're looking, and you're looking at your track record throughout the year, and we don't go too deep into it much, because everybody, you have your own journey, right? You're in your own space. And so when your time comes and it clicks, right, that's for you. That's your time. But we want to make sure that you all know that, right? So as you're going through the trainings, think about that. Like, what's gonna be that one setup, that one or two, setups that I really like, that I want to home in on, and that's what I'm going to be patient and look for as we move into 2023. Everybody follow me on that. Drop me a big 4 in the chat, and we can get going. Right, give yourself a year of doing that. You'll be amazed. You'll be amazed. All right. So we want next year, for you all, because you're gonna have the point where you're losing money and you seem like you're never going to make money. You can't figure out why. Then you get to the point where you don't lose as much money. And then you get to the point where you stop losing money. And then everything takes off. Then everything takes off from there. I mean, losing money overall for like a quarter, a year's time. Not, you're going to lose trades, right? That's not what I'm saying. You're not going to lose trades, but you're gonna, you over time, it just moves like, you know what, man, I'm making money. Like, I had a profitable year, right? And that's what it's all about, is getting to that point. And like Ryan always says, give yourself some grace, be patient, give yourself time to learn this thing and really hone in. That's why I asked the questions about your journaling, and taking that 100 trades of that one particular setup, or 100 trades a piece of those two particular setups that you like, that we teach, using, you might have a certain indicator that you like to use along with it, right? We just want to make sure that you really make that your focus. Yeah, I heard that my FX book is pretty good, right? Mm-hmm. Mm-hmm. And yeah, and there's a lot of other things. We're talking to some groups now that have different type of journaling instruments. I know my FX book, I heard that is really, really good, right? there's a bunch of them, some folks that we've been talking to on the back end as well as we head into 2023. So just wanted to get that covered, something to think about as we move into the new year. So I heard Ryan talking about the Aussie, so let's check in. I know I wanted to take a look at that Aussie NZD. My computer crashed, so I'm actually interested to see what's going on with it, if it started to move or not. But let's check in and see what we have. So here's the thing that I noticed, right? So posted it on the lower time frame, and you can see that there, right? How it's made that swing, right? Beautiful, beautiful move, making higher highs and higher lows now, coming off this beautiful 80-20. All right, so correcting a bit, but look, all right, you come up here to the weekly top-down analysis is very, very important because that can help you out. Whereas the trade setup might be posted on the lower time frame, but sometimes, right, those can be the building blocks to larger moves and larger reactions, right? So this is the Aussie NZD. We know about this ride down, right? We spotted that a long time ago, but we've come into some pretty good support, right? On the weekly time frame, past resistance becoming future support, right? That's just good old-fashioned solid price action there. Nothing else on the chart. We can see that we've come into a level and we've got some indecision. Okay, it's been a long run from a weekly perspective, way oversold. Okay, way oversold. So it's just a matter of if now is the time that momentum wants to shift. So we're coming down into being oversold on the daily, right? Which that just helps us with the momentum. And now, right, we've got a daily 80-20. Okay, and we've seen in the past, right, in the not too distant past, how these type of setups can be. They have the potential to be very powerful for the long run, like some of the New Zealand, like the New Zealand CAD, and some of the pairs that came into that daily 80-20 zone and made a run for quite some time, right? So right now, if that was to make its way back to the daily 382 long term, what is that, over 300 pips back to the daily 382? Is that right? Yeah. Okay. So you can see it's kind of just settling down now, right? Indecision, but it's holding at this 105.72 level. So it's just amazing how when you come down to the charts, you get things to start to line up. Okay. So it's just a matter of, do we want to hold at this level? Okay. This is a 4-hour cloud that is hovering below. Okay. But we know, right, if it's going to start moving up, we know eventually we'll get that Tinkinson and that Keejanson, that crossover, that TK crossover. Okay, so we'll see what happens. Oftentimes, this is where we kind of get that stalling and that consolidation to take place, right? And then it tends to break out, preferably in an upward direction for the correction play. Okay, for the 80-20. So we'll continue to keep a close eye on this. This was I was playing around with this fib earlier, right? But it might just start ranging for a while. But you see how this pushed up just beyond, right, that high, and then it came back, and then it broke trend line. So this one's going to be a fun one to follow and track the progress that we are on the 15 minutes. So just continue to keep an eye on this. But already, right, coming out of the zone, it's traveled a good little ways. Good little ways. So we'll see how it ends up. Okay, so there's the 5-minute 382. So off your 127 zone, off of 5 minutes, like 30 pips or something. Okay. Any questions on that?
Oh,
No, sir.
All right. Appreciate it. The Aussie Swiss, I think this one was already complete on the 15 minute. Trying to refresh my memory a little bit. I ain't gonna lie to you, Ryan. I was a little heartbreaking over my computer.
And I believe it, bro. Listen.
This thing has been with me for a long time, man. Long time. So my goodness. But anyway, enough of that. This there we go. The Aussie switched to that 15 completed. You might get a bounce back on that. It's hovering around that daily level, right? little double, triple bottom price action in that zone, but that one already completed. So this is one, right? You know, you take that mental snapshot that this is just beautiful price action, right? Out of that zone, straight up to that 382. That's what we like to look at, right? So whether you're using your cloud or 50 pips, using your cloud or using inner trend line breaks, right? And putting your stop right below that low after the trend line break, those make for really, really good risk to reward type scenarios there. Okay. Thing, right? So here, this is if we come to the daily, you can see in the zone, right? Why are we're trying to get that reaction. So you can see how we've got that tight consolidation, right? And it's coming off the bottom, right? You got that little push because it's coming off the bottom of that consolidation. Now, eventually it's going to break out, right? So you either trade bottom to top, top to bottom, or you wait, be patient and wait for the breakout. Because usually when it breaks out, it goes for a good little run there, right? A good little run there. That box should actually be a little bit wider to reflect that low. All right, something like that. It's the bottom of that low, and then you got that daily level somewhere in there, but kind of waiting for it to break out of this mess here. But there you can see that there's little plays that you can take advantage of on the lower time frames, right? So you look here, how that's just making a move up on the 5, right? Just going, right? That may even take that A out on that 5-minute setup. Any questions on the Aussie Swissy? That was a pretty good one on the 15. Joy, what's up? Had a question on the Aussie? No? Okay. Let me look at
She said the 10-year bond.
On the Aussie, what is it doing? Is it increasing or declining? I haven't had a chance to look at it.
Oh, she doesn't have any microphone access. One second, Joe. I got you.
Okay. Oh,
My apologies.
there we go.
I'm sorry, my hands, I can't type that fast on this iPad.
Mm-hmm.
So I was looking at the 10-year bonds for the Aussie.
Yep.
And I noticed that it's like in a down retracement on the monthly, but it looked like it reached exhaustion. But the daily hasn't yet reached exhaustion. Could that mean that it's still like downward momentum, or we would need basically that catalyst for it to break through to the upside?
You need a catalyst. I'll have to read because there was just an article, right, for QDP growth, the low estimates that came in. So I'm gonna have to read up on the let me read in greater detail on that report, because then you can make a determination on what may happen with those bond prices.
Okay.
Yep. So let me get back to you on that one. That's a great question. Being that report just came out, it'd be interesting to see which way those yields decide to go. Yep. So, and then everything here that's going on with the U.S. with the jobs report that came out, like all of that impacts China. You know what's going on there, the back and forth. So let me read up on it and get you a solid answer on that.
Because the only reason why I say that is the reason why I took that risky 5-minute, and I am still in profit on that ACAD. It's still working in my favor. But the thing is I'm at the point to where I don't want to exit out the trade. It's not that I want to exit out the trade because I'm scared. Well, at this point, I've gotten to the point to where I'm not scared of holding the trade, but now I'm trying to analyze whether if it's necessary to hold this trade and just take what I got and see if it goes to the downside and find support unresisted in that and take it to the downside.
You're long on it. You've been taking a ride up.
Yeah, I got a nice little 5 minute on that, and I'm still in profit on it. But
No,
it's like a
off the
consolidation.
okay.
Yeah, because I was
Yeah.
looking to see for it to go, if it was gonna go to the I think it was the I'm riding on the 4 hour, and I was gonna see if I could take that to the D extension. Because the thing is, I noticed what a lot of my failures in the 80-20, especially if it's a strong trend, and this has kind of been kind of strong, that I'll get into it and then I notice a whole nother fib form and it's still going to the upside, and then I lose out on the 80-20. So I was like, you know what? I want to say homegirl Carolyn has said something like, can you play that to the upside for that 20%? So I was going for that 20% and play it to the D and then ride it back down, because how all the key levels, as you see, what all the key levels, they look like they about 50 to 60 pips apart. And it was like, when the CAD gets stronger, yes, it's going to go down, but it's like, sometimes it seems like you can, because some of the prices is priced in, that I'm trying to, understand and learn when to know the difference when it's priced in and when it's actually real excitement from the market. Whether or not when to, and this is where I'm having trouble is, okay, let go to trade, it's new hype, is going back down. So that's why I'm having trouble with.
Gotcha. So this setup, this particular scenario here, right? So when you start to see this here, or you see how I've got it, got the rectangle around it, right? That lets me know, right, that we've got a tight consolidation here and price is gonna break out. So if I was just playing this price action right here, okay, and these are things that you spend your time on the chart, right? You start to just recognize it, okay. So absolutely, right? Ryan is always big, right? He says all the time, like whatever you do it consistently. Make sure it's in your trade plan, right? So when you see these type of setups here, right, and that tight consolidation, that's a breakout play, right? So if you didn't have a fib on your chart, and we were just looking at raw price action here, if that broke out, would you trade it in the direction of the breakout?
Yeah.
All right. So you have to say to yourself, right? Like, okay, well, what are my rules going to be? Well, I prefer to trade. You may say I prefer to trade breakouts in the direction of the trend, right? Maybe that's what I do, right? So if this trend right now is making higher highs and higher lows, and I get a breakout, right? I get a breakout to the upside, then take it. Set your risk management parameters and take the play.
Right? Well, I'm taking them. The thing is knowing when to let go. Okay, so let me go ahead and admit.
Set a resistance target potentially, or set yourself up. You're measuring if you know how to use the fibs, right? So you can use a combination of things to say, okay, well, I may meet some resistance and a reversal here. Maybe take it just to the next zone, right? Take it from zone to zone.
Okay.
You still can set yourself up. The key all goes back to being consistent. You can set yourself up for, okay, based on how you set your stop loss off of these. Maybe you're setting yourself up initially. You're saying, you know what, I want to get a 2-to-1 out of the setup. I'll play a breakout trade and a retest. I at least want to get a 2-to-1, right? So that's all going to be determined by your stop loss and where you place your stop loss. So if it breaks out, okay. And these are great questions that all of you are starting to ask, because these are the caveats that Ryan always talks about. The only way you get to this point is to spend the time doing it, right? There's no way around it, right? Because that's the only way that you discover that these type of price action patterns occur, right? In the market. You don't want to take anybody else's word for it. You want to figure it out yourself. So you may say, okay, the way I want to play this is a break and a retest of a level that it breaks out of. Then you come here and you say, all right, well, what I want to do is I want to make sure I put my stop below that low. Okay, of the retest of the breakout. Well, if that's 20 pips at the stop, then if I'm in a 2-to-1, I'm trying to get 40, right? 3 to 160. You know what I mean? And that's how you're gonna play it. That's how you're gonna play it. because it typically a retest at some point. That's one way that you could play it. So depends on how tight you want to have your stop loss and things like
And
that.
see,
So
that's what happens. Cause the reason why I say that, because I'm mad at myself because I didn't look at that account. I'll go ahead and say it. So what I did was for several pairs that I consistently trade, so then that way it wouldn't mess up with my overall capital, I created separate accounts and only trade that currency in that account. That's it. So that prevents me from overtraining. That's what I did. But the thing is that I had one, it's like every time I put my stop loss in profit, it hit it and it go back. And what I did was trying to be smart again, is what set a limit order right there. So then that way, if it goes back down, I'm still in the play and I'm out that first trade, right? But it's not working.
nah,
It's
nah.
not working. And I can't.
Keep it super simple.
It was simple. When it came out, it sounded smart, but it's not working.
Oh yeah, keep it super simple. You know, set yourself up at a 2-to-1, set your stop and let the trade run. You know, and determine over a series of trades what your strike rate is going to be, and make your adjustments. And make your adjustments from there. Keep it simple. Keep it simple. I used to do the same thing. Like, well, if it reverse, I'm gonna make money this way. And it all came back to I didn't want to lose. That's for me. That's I didn't want to lose a trade. I didn't want to lose money. So, you know, I started trying to figure out all types of ways, and then I went down just the deep hole of YouTube, and things got all jumbled up. You know, that's how my career started out as a trader. So, you know, just keep it simple. You know, put your strategy together, set yourself up in a proper risk to reward ratio, find the price action pattern that you like, and then you analyze. You constantly analyze and revamp, you know, and revamp your strategy, but keep it as simple as possible. Because the market is simple.
I'll go ahead and increase my lot size. That's only because I'm at a 0.1. So it's either I'm in a trade or I'm out to trade. And right now, I guess my psyche is I don't like me not being out to trade if it's still potential. So, okay, I got you. Thank you. I'm trying. I'm sorry. I was supposed to say I'm trying.
It's all good. It's all good. All right. Good stuff. So let's move on. I want to take a look at the CAD yen. I think there was a potential on the 15. I think it's already moving. So this was what we drew up and we spotted doing a ritual potential head and shoulders. Looks like it's trying to get there to that level, right? We got a little bullish push this week, but we'll see if that continues to decline. All right. So look, here's your trend line break from your longer term perspective, right? See, look, draw your charts up, let it happen. Draw your charts up, let it happen. And when you see it enough, you make the play, right? It's a strong bearish candle. Double top, we identified the pattern. Draw your conservative trend line in there. Well, that's the inner trend line, not too conservative, right? But you got a nice bearish candlestick break. Okay, you take your mental pictures. If I see this, I'm going to make the play, right? And that's a huge bearish candlestick off the daily, right? So that's plenty of room. Look at that, all right? So that's how that's been moving overall to the downside, right? Got a nice evening star candlestick formation right there up against resistance. So to retest, decision, indecision, decision to the downside, okay? Now, when we come in to the 4, you can see how, right? The market moves in waves, right? The market moves in waves. So that's your 4 hour, that's where we are. Here was a breakout, see? You might, after you rep everything out, decide, you know what, I want to look for consolidations and breakouts, preferably in the direction of the trend. See? So that's why we ask, are you marking up your charts every week? Because that's how you train your eyes, right? You develop the spatial intelligence. Okay, over 400 pips to find those setups. Here it is on the 1 hour after the breakout, right? Then when you dress the fib up off of that, that's how you can find, right, high probability U-turn zones. Okay, so you can see here, this is one to pay attention to. You'll notice a lot of these yen crosses have this same type of price action pattern. All right, same type of price action patterns off the levels. It's weird sometimes. But here we are in the 118 level here, up against weekly, right? Weekly level. Instead of weekly, instead of 4 hours. I think that might be a 4 hour level. And so we'll see if we can get that 382, right? So right now, okay. So we're 200 pips away, and we got the same thing zoomed in, right, on the lower time frame here. Okay. So that was that breakout. Okay. And now here we are. All right, smaller wave, you got to push a little bit deeper to that's a 127 at that price level is represented. Okay. So that's an opportunity, right? You like trading those 80-20 plays, that's an opportunity. Okay. All right. So you know, if you're busy and you're working, you see these get set up. Say you don't like playing the AB boundary, but you like these 127 zones. Then if you're busy, leave your computer on, come in, all right, and put you a horizontal at that level, right? Or something, put an alert, you know, at that level to let you know when price gets there, right? If you're not the type to use limit orders or anything like that at certain levels, trading small, put you an alarm. Put you an alarm on there. Set the alarm, okay? And then let it alert you when price has reached your zone. Okay. Then you can put in your little box here, put your notes. Maybe put your where you want your stop loss, right? So if you put your stop loss at the extension and you give it room, okay, you give it room, then that's your level, right? And if you're catching it right at the 127, which requires what? Patience. You gotta be patient for those type of setups to occur. Okay. And what is that? Almost 170. But you're looking back to the 382 at 325. So waiting for price to come down to that level automatically, if you put a wide stop at the D extension, it's automatically putting you in a favorable risk reward ratio, right? It'll run, it's a wider stop, you'll trade smaller, right? But that's okay. The key is getting consistent. If you're only trading in the market, you will be amazed at when you can consistently find setups, how micro sized positions can accumulate. Okay, is everybody, am I clear on that? Drop me a 1 in the chat. Right, because the key, especially when you're starting out, or if you've been trading a long time, you know, and you haven't gotten as consistent as you can be, find a consistent setup over and over and over again, right? So, you know, 1% is 1%. So that's the beauty, right, of what we're trying to teach, whether it's this setup or another, right? Even if you have your own setup, you know, I got my 2022 special sauce setup, right? The key is going to be risk management, no matter what, because whether I find this setup on the 15, right? Think about it. Whether I find it on the 4, the weekly, right? The daily, wherever I find this 80-20 setup, when I divide my, you know, my risk by my stop loss, and if my risk is 1%, it's going to be 1% no matter what. That's where the magic is. And so no matter, so Maybe I'm trading this one on the 15, and when I get done doing the math and my stop is at the D extension, I could trade this at 6 micro lots. But maybe I find that same setup on the 4 where it's a bigger wave, it's an 80-20, and my stop loss is, twice as big. I only could trade that at 3 micro lots. But 1% is 1%. It really eliminates a lot of headache doing it that way, right? Or 0.5% or whatever you're trying to play. And if I'm at 1%, right, we say it all the time. If I'm at 1%, I have to lose, right, 180 20s in a row to blow my account. So I can't, if I'm using proper risk management and I know that, I can't allow, and I know it's tough, I can't allow myself to get frustrated and flustered and quit when I lose 5 or 6 trades in a row. It happens to the best of them. Right? But oftentimes what happens when we work with people over the years is that you find out that oftentimes, right, I'm frustrated because I'm over leveraged in the position. Right? I'm over leveraged. So I've got a major drawdown occur. And then it's hard to have that resolve to work yourself back to break even. Right? You're down 50%, you got to make 100% just to get back to break even. Right? Those become very, very tough scenarios. Okay. Especially, the only way you eat is if you make profit. Right? So they have to make back 100% just to get back to break even. It's tough psychologically, right? So it's better, and it's tough. I know. It's because you see those setups that are just so amazing and awesome, and it's like, you know what, I'm going in on this. But over time, you can pay a very heavy price, right? So just something to think about, no matter what style you trade, time frame, whatever your methodology is. Just know that. Okay. Any questions on this CAD yet? No. Okay. So you can see from the top, right? And you guys can see the method, right, to the madness that yes, is this has fallen bearish, right? The CAD's been taking a beating, right? But as it moves down, it moves in waves. That's it. That's all we're trading, right? So when we get a price action that's extended like this, and it breaks through a level, if you go back and you watch the training videos, right, we talk about scoring a point as it breaks through, in this case, levels of support. It likes to score a point, eventually pull back to retest, break the level, score a point, pull back to retest, and then continue. So it's those corrections, right? Knowing that that's how price action works, those give you the opportunities to play, right, these 80-20s, right? Playing that reversal right off the B boundary, if that's your thing, right? AB boundary forms, you say, you know what, I'm gonna draw a trend line. If I get we already have a low because it's a B boundary, and if it breaks that trend line, I'm looking to get in the trade, whether it's with scalp or to the target, however you do it, right? You're just aiming for consistency. Like this is the 5, right? So if it's gonna move up now on a correction, it's gonna do it in an ABCD wave, and we can see that that's what it's trying to do. That's what it's trying to do. All right, so that's the CAD yen. I want to go into some of these euros, take a look at this euro Aussie. Because last week these are some good swings, but when we went through the ritual, we realized that hey, we're in the range, right? Price, look how it pushed that, right? The more you zoom out and you look at it from the top down, the easier you can see these, right? So there's traders out there that are big time, where they're looking at daily, weekly, monthly ranges, and then waiting for price action to break out. Because typically when it does that, it's going to go on a run. Right. So something to think about. Okay. So here we are in the range. We're at the bottom of the range. We're working our way back up to the top of the range. Okay. And we can see when we talked about that over the weekend, exactly what it did, right? How it broke that trend line. See that beautiful swing and that bullish candlestick? See? Top to bottom, bottom to top. That's beautiful. Right? Two bears, two bulls. Bullish candle break and close. Straight back up to the top. Now it's trying to make a decision on what it wants to do. But as you work your way through the time frames, you can see, right, how it broke that trend line and worked its way back up to the top of the range. Now we got a new AB boundary and it's trying to double over as it's trying to retest that 157 weekly level. See, look, that's the 4 again. And then if we come down, you can see here on the 15, like, this is just how the market moves, everybody. Like, we're not making this stuff up. So this is, right, on your 15, look at that. Look at how that played, right? Look at how that played out. Look at the reaction that you got out of the zone, okay? So the key is identifying the zone. How much you want from that is going to be totally up to you. You may want to play it to the 382 or the 61. You may not, right? You may not. You may be in and out. You may say, I want a 2-to-1 off a trend line break or out of the zone, and I'm through. I don't care about the rest. Whatever works for you, right? We're just trying to help you guys with the education in regards to knowing how to find high probability U-turn zones, right? On any time frame. All right. And yep, that's all I wanted to cover on that. Any questions on that EuroCAD? This is eventually going to break out somewhere. Okay. All right. All right. Let me take a look at Euro Aussie. I'm sorry, I said the EuroCAD. I'm gonna check the EuroCAD next. All right. Hold on 1 second, everybody. Ryan, you good?
Yes, sir. Appreciate you, bro.
Yep. All right. Cool. All right. So look, EuroCAD bullish. Right? Been moving bullish. We know that the weak currency in the group, right? And then this CAD, right? Oil prices plummeting. But look how overextended that's getting, right? Look how it broke through this zone. Okay, broke through the zone. So it's gonna be quite interesting to see where we are. Okay, look, we just kept going up and up and up and up, and we had 3 scenarios drawn, and it chose to break out. Okay, so this is gonna be quite interesting. We got a new AP boundary. We'll see if it respects this zone or if it's going to push down for a deeper retracement. But we may see it where it corrects and then pops out of the zone and continues long. But we got a new AB boundary on the 4, and price right now is moving down. So we'll see what happens with that. If you trade AB boundaries, right, there's your opportunity, right, especially on your lower time frames. See. So we always say, right, let the AB boundary be your signal, and then you determine as a trader what you want to be from there. The smart trader is going to do all the work for you, right, in regards to setting up that new AB boundary. Then you have to take over and figure out how you want to trade that setup, okay, and get comfortable with that. Right, it's a read and react. They talk about that in sports all the time, right? You don't want to get caught thinking too much, you know, on the field, right? On a football field, could get caught thinking you get beat, right? You have to read and react. You have to study, know what you're looking for from watching the film, And then you have to react when you see it in real time. Okay. There. See how this has been moving down. Right? That's a 5 minute. Okay. That's your 5 minute right there. Then manually do that one through the high. That low, probably look at that one, just run it just like that. Bang. Okay. That's your move. That's your setup. Off a beat boundary. Off a swing. Why? Because at the end of the day, everybody, all this represents, think about it now. Right? Here you go, Joy, right? With that pause. See here? See your pause and your breakout? Okay. That's what I'm talking about. All right. But if you didn't have your fib on here and you're just looking at price action, that represents another just resistance. That's why it has it here, right? You got a 5 candle combination forming a high. And the resistance is still a support and resistance game. 5 candle combination, I got a new high that formed, I can look to short. Right? Either off the current chart or drop down a time frame wherever you want to trade it. And that could be your game plan. That could be your game plan. Right? What is this, the 4 hour? Right? So link here like that. Okay. You can see that level. See? There. Everybody see that? Drop me a 2. Come on now. You guys got to see that. We got to be able to see that price action consistent. All right. That's awesome. That's awesome movement. All right. You like trading lower time frames? You're done already. Done. Right? Or I'm manually moving my stop, or I got a trailing stop somewhere. Right? We're right back down here to this level now. All right. Just trying to reverse. I mean, can't beat that. So, right. Okay. So that's a Euro cap. Just wanted to go over that. Wanted to look at Shauna. They wanted to look at the pound Aussie real fast. Okay. See where we are. All right. So this one has, right, off of this setup. This is your month right here. When you get these, right? See how I double bottomed in that zone? That's a runner there, right? It's over 600 pips. Here's your upside target right there at the extension. All right, that's a big move. All right. You catch one like that in that scenario, go ahead and just let it go. All right, let it go. Let it run. All right, that's a home run trade there. All right, that's what it looks like off the same scenario. All right. See if it forms a low and continues up. And then you're just moving your stop loss up along with it, right? That's your weekly look. formed a low and is pushing up, retesting at 180, 190. Right? So if it breaks above there, you say, you know what? Probably going to retest and continue long. That's if the Aussie falls apart. We shall see. Because you know, I don't know what's going on with China. I thought I would see a bigger pop in oil with the news that China is lifting some of the restrictions, because that technically people look for demand to increase. But it hasn't quite happened just yet.
So Benny, you had Jamie Dimon come out today,
Oh,
talking about big time recession fears in 2023. Yeah.
Yeah. And man, I'm glad you told me that, because I'm wondering, I'm looking at oil like, what is going on? Like China saying it. So, you know, we got more tightening coming on, which has me concerned with that Aussie, which is why I didn't, you know, I wasn't a big buyer, you know, of it, because I'm just not sold that that's gonna continue over the long. I'm talking about from a swing perspective.
Yeah.
You know, in a short term, it went on a nice run, but I'm just like, man, it's gonna find a highs at some point and turn over. But it seems like the market just keeps trying to avoid the inevitable right now.
Exactly.
You know, so yeah, it's gonna be quite interesting. We move into 2023. I know the Biden administration, they've got a low point on what was it, 70? Man, how does it figure it?
Thought it was 60. Thought the
Is
low
it
point
60
was 60.
something?
It was
Okay,
the range was 60 to 74, something like that, I think.
right, to start rebuying oil, right, for the reserves.
Yeah.
All right. Yeah. Odd times, but steady long on that pound Oz is getting up to some exhaustion levels. So if you jumped in that when we posted in the Telegram, that's got to be what 2 weeks ago now, something like that. In the Telegram, is getting up to some levels. So if you're long in it, make sure you start to either continue to move your stop up, right, to protect yourself, or you know, reduce your trade size a little bit. Then let it continue to run, but secure the bag if you've been in it that long. Yep. I want to take a look at the pound CAD. Right, just pushing bullish. Just continue. Look at this run that is making. All right, we're a bit overextended now. Look at that. Wow. What a run, right? But we've hit the 1.618. Still pushing. This one here, right? That rejection, we start getting breaks back below 165, right? That may want to relieve itself a little bit before it gets to that D extension. So that's just one to watch. I would keep looking at this on the 5. On the 5, it already gave us the business. Look at that. We know what that means, though. Bam. Ooh, you can see that. Missed that initial move out of the zone. See how much that wants to correct. All right. See if we can get that 382 off of that one. Man. Yeah, that might be due for a correction, then down. Right. So just continue to be patient with that one. But that's a potential there. Right. All right. It's a B boundary on the larger wave on the 15, but it's trying to do its thing. See how that plays out. All right, that's the pound CAD. Pound Swissy. Earlier on the 5, I was. It might have already made his. Yeah, it did. Right to the 382. So I missed that one, everybody. Missed some good stuff. Computer crash, you miss everything. My goodness. But that that one worked itself out. So check this out though, right? So sometimes we get caught up in all of this, right? So if my simple setup, took a 5 at the short 166.73. That must have been another one, I think. If our setup is here, right? So think about this. Okay. If my setup is there in that zone, and my stop is here. And my first target is the 382. Now, for all this whipping around and dancing around, did we win the trade? Yes or yes? Somebody tell me.
Yes.
Yes, absolutely. You won the trade, right? So through through all of this nonsense that we have no control over, right? I don't care how many moving averages, MACDs, crossover, strike. You have no control over the path in which it's going to take to get to your target. You just don't, or how long it's going to take. So through all of this mess, right? My risk is 50 pips, and my take profit is pretty much thing close to 100 pips. That's a winning trade. And I know that if it hits my stop, if I risked 1%, I lost 1% if it would have hit. But because it went to my TP, I gained. Right? Pretty much at a 2-to-1. That's it. And you do the same thing over and over and over again. At least that's my perspective, right? When I simplify things, that's when things got a lot better for me trading. So I hope that helps. I hope that helps. So that's where we are on the pound Swissy now, right? And then you start noticing stuff, right? The patterns, right? In the pound pairs. So you see here, right? Bang, the reversal. It just happens over and over and over, right? But this is your main FIP setup there. Okay, that's your pound Swiss. See, look where we are. How we talk about how sometimes those smaller time frame setups, when you look at your higher time frame analysis, they may have the potential to become bigger monsters eventually. Okay, here's the daily. All right, it's having an issue at this 114 level. But if we break in, we get below that, right? Then we've got another support here that we could be coming into. Right? Like that. And I'll link that down. So it may have the potential to become a larger swing to the downside eventually. But you may not care nothing about that. You may just want to deploy your fibs on one chart, and that's what you're going to stick to. Just mark your levels. Right? We always urge you to mark your levels so you know where you are. But you can see here how this may, right, when it gets to those higher time frame levels, when it's time for it to break down, if it's going to break down, it's going to break down. So we'll see if it holds at this level, if it continues to move. Right? We had it drawn up both ways. So that's the pound Swissy, the pound dollar. Right. take a look at that one on the daily. Starting to get a little downside pressure. Okay, we'll see what the dollar wants to do. But we've come down a little bit off the high at that level. All right, pressing now. Okay. Here we are. All right, so it's either going to respect that trend line and continue, or all right, we're going to get a breakdown. Okay, so you mark your charts up and you just wait. Right? If you're aggressive, okay, all right, already some smaller moves there. See this move here to the downside that could have been taken advantage of with trend lines, right? Do the high if you're a day trader, okay, like so. See, came down through the highs, even more aggressive, right? You put your through the high point if you're looking to track all the way through. Oops. Wicks too close. So you draw it through. Well, here's a break. Here's where we are on a fib. This has moved a little bit sideways. Forex. But that's the look. Be interesting, right? How it broke out. Okay. Broke out of these levels here. So I came down and broke out of there like that. All right, kind of broke out. And now, right, we're pulling back. So that, see what it wants to do. It takes out the A, we're just gonna continue down. But this is how you can navigate and just find, right, those smaller setups. So you can put your stop below the A if you want. Let a low form in the zone. If you want, put your stop below the C. However you want to do it. You can put your cloud on, see if it really wants to reverse. Well, okay, you need extra confirmation. See if it holds. All type of things you could do, right? When you just spot the reversal zone. So like anything prior to that D extension being hit. All right, so for example, if I took this trade, it's the same thing, right? If you didn't have any of this other stuff on here and you just said, you know what, well, here's my stop, 34 pips. Here we are, 64 pips. All right, do the math, see if it swings your way. Right? Or you could be more exact with additional confirmations. Questions on that pound dollar?
No, sir.
All right. I wanted to take a look at earlier in the day. I don't know how it ended up. Let me see. At this NZD, but I can't quite remember. See if it'll correct. Yeah, still waiting on it. Waiting on it to correct to the downside. Never mind on that one. I did want to look at the 4-hour NZD USD. right? Because we're getting into some levels, right? We're starting to get into some levels. Way up here now, right? Way up here in the zone. Okay, almost got right to that level again on the nose. So I'm interested to see, right, if this is gonna finish coming down. I want to see that continue to move down, right? So we're moving sideways now. Do we get to break out to the downside? Nice bearish candle, then it froze, all right? Then it froze. So we're still looking, right? Keeping that one on the radar to see if we get that breakout and that continuation to the downside to the 382. All right, it's 200 pips or so. Any questions over anything we went over this evening?
No.
All right, and wanted to touch on this dollar yen. This was the graph that was posted in the newsletter, right? So it's smack dab on the 80-20 from the daily, right? So it'd be interesting if we can get above this level. You can see it got bullish, right? It got bullish off that level, which is what we were looking for. Here's your 4-hour swing off the B boundary, right? That's a nice move, okay? And here you can see where, we zoom out a little bit on 15, okay? There's your swing out of the zone. Okay. So again, can't control what the price action wants to do once you're in the trade, but we've got the math figured out, right? So off your 15, okay, it's 215, right? Up to that 382, that's 391, okay? If you need it tighter, then you're looking at lows to form at that level, wait for trend line breaks, wait for cloud breaks, right? And then you look to get in. If you say, hey, I would like to trade, you know, with a smaller stop, if that's your thing, then you utilize your trend lines and everything, right? Or your cloud breaks to get in and put your stops below the clouds. All right. Ryan, anything to add before we wrap things up for this evening?
No, sir. Great session, man.
Appreciate it, man. Thanks for filling in the beginning. Again, I apologize, everybody. Death of my computer, my old HP. Sitting up here looking at it now, Ryan. Just a blank screen. So, oh man. So with that being said, that is it. We will see everybody tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session. Thanks everybody for hanging in there with us. Have a great night.
Good night.
Thank you.
Good night.
Good night.
Welcome. Good night.